Hello and welcome to today's video on high altitude investing. So today's VIP video is going to be understanding wicks and how they can affect market movement and how to utilize them for your benefit. So first let's draw a Fibonacci retracement. This is to get a better idea of support and resistance, because wicks have a lot to do with support and resistance, and I'll explain that here in just a second. So basically a wick indicates when a price or a certain area value in the market, whatever you're trading, is rejected. So for example, all of these, this is Bitcoin, US dollar, 1 hour candlesticks. For example, as you can see, these huge wicks down right here, these huge wicks down indicate a rejection of this price. So the market does not like this price down at 11.44, and so it keeps getting rejected. So the reason for that is the body is the open and the close of the candle, and so if there is the wick, which is the price movement in between that time, if there's a huge wick down, then that means that the price does not want to stay at that value for very long, right? So it doesn't stay at that value long enough to close at that value. So you can generally, with huge wicks like that, you can generally expect the market to pump the other direction. So if you have a huge wick on the downside, you can expect an upside in the pump. So huge wick down right here, and the market came up and pulled up into this support and resistance, the 0.5 Fibonacci right here. And then it came right back down to that price and got rejected again. And it's just been kind of leveling out, figuring out where it's going right here. But we did just recently have a pretty big wick on the upside, and it looks like it might kind of pull back for a few candles because of that. So that's just one thing that you can use wicking for. I generally use it to, if I see a huge wick up, then I'm like, okay, I can expect a pullback for at least a few candles, And then if I see a huge wick on the downside, then I can expect a pull up on the upside for at least a few candles. So it basically indicates a rejection of a certain price. The longer the wick, the better. And the more of them, the better too, because if there's a whole bunch of candles with huge wicks on the downside, then that generally indicates a pretty big rejection, or a pretty big rejection of whatever price it's at. So as you can see, the price got rejected right here, price got rejected again right here, price got rejected again right here, and this was just kind of what pushed this channel, as it kind of channeled off the top here. And that's what really told people that the market did not like this 1230 range, and so because of that the prices got rejected and it pulled back into this support. So that's kind of what I'm thinking in Bitcoin, is that we're kind of going on a small upward move here because of these huge wicks down on the downside. We have these big wicks. I don't know how far we'll go up. We might only go to like 1200 before we get rejected again and go on the downside. But that's, because of these huge wicks right here and the volume, and that there's a couple of them, it looks like we could have a push on the upside in this market. So that's today's VIP video. Shout out to Axiomatic for the video idea. I've been living at a couple friends' houses and just staying at their house, coming to use their Wi-Fi and stuff, but I'm doing alright, and I'm still getting to be able to record record videos with my Wi-Fi coming down to my friend's house. So expect videos as normal, and thank you guys for tuning in today. I appreciate it. Stay profitable, and I will catch you guys in the lounge.